Welcome to Trading the Close on this Wednesday. I'm Toni Valliere with Verified Investing, and here is what's making headlines today. Holiday shopping numbers for December are better than expected. Retail sales rose 0.6% last month, slightly higher than the estimated 0.4%. Demand for a 30-year fixed loan is on the rise, with fixed mortgage rates now down to 6.75%. Applications for mortgage rose 9% for the week, while applications to refinance a home loan rose 11% from the previous week. Shares of Spirit Airlines tumble after a federal judge blocked the airline's planned merger with JetBlue Airways, claiming the $3.8 billion deal would harm ticket buyers. We saw the Dow plummet yesterday, and it continued down today as 10-year Treasury yields continued to climb, hitting a 5-week high. Let's see where things stand just minutes before the closing bell. Right now, the Dow down 63 points, the NASDAQ down 117, the S&P 500 down 25. Oil, the only one showing green, up just slightly. Gold down 22, and Bitcoin down 577 points at this hour. My first special guest today, Chief Market Strategist Gareth Soloway, is here with a breakdown of today's trading. So what are the big takeaways from today?
Yeah, so the big takeaway is that we tested a big technical level here, and so far it has held. So I think in yesterday's Trading the Close, we actually talked about this trend line, right? This level here to here and to here. And I said, as long as we hold above this line, the markets are safe. But if we break this line, that's where trouble can start. In fact, I see if we break this line, as much as a 10% move down in the stock market overall.
How far? What's the next level?
There's a gap fill all the way down around 440 on the SPY, which would be like 4,400 on the S&P 500. Okay. So right now, today, early in the day, we were down, piercing the line. By the end of the day, they've brought this market back up above the line. So we are safe for now from any major corrective move expected. And as long as we stay above this line, they could just push us right back to the all-time highs very, very easily. So that's one of the takeaways here. We did see retail sales this morning, like you mentioned there, and those did come in better than expected, which again, the market doesn't like. The market's like, oh, good economic news, that's bad for potential for free money or rate cuts. And that's the issue there, is that right now still good news is bad news for the stock market. So that was kind of one of the interesting things of the day, testing that level. As a technician, I just will continue to watch this level right here. Right? If we break below it, that's where I go into warning mode. As long as we stay above, we're good to go. Now, a couple other charts. You mentioned Spirit Airlines. Yeah. Spirit Airlines, what a drop on this just yesterday, and then continuing. That's dramatic. That's a 50% move down, or over 50%. So again, the kicker here is that Spirit Airlines has a ton of debt. So the reason why a stock drops, and remember, stocks dropping don't necessarily mean they're good deals. You have to look into the details. And the big question now is if they don't get gobbled up by someone else. And if JetBlue can't buy them, they're not going to let American Airlines buy them. They're not going to get United or Delta, right? Those are even bigger players, right? And so at these levels, you now have to say, okay, can they survive, or do they have to file for bankruptcy? Well, I was actually surprised that they rejected it just from the aspect that they won't really survive for very long. So it doesn't mean you won't get a technical bounce. There's always technical bounces with hope emerging, but you just want to be careful. Like, so for instance, this wouldn't be like a long-term investment for me, at least. Okay. Couple other things to take note of here. NVIDIA, overall, at one point today, it reversed the entire upside from yesterday. By the end of the day, it rallied all the way back up. So what's amazing about this is that as overbought as NVIDIA is, and the flush today was massive, reversing the entire up move from yesterday, buyers still came out. And again, where these buyers are coming from, my expectation or my thought process is that buyers are leaving Apple, which again, we mentioned, they're cutting prices in China. China's economy's in tatters, essentially. And so money is coming out of Apple, which was the most highly invested stock out there. And they're going to these other favorite plays, these AI, these future plays. And NVIDIA is the recipient of that. So I still think it's overbought, but you got to be aware that it still stayed pretty strong today. So there's some interesting things. Last thing I'll mention before we get into some other things is this is one stock I am interested in. It's Newmont Mining. Newmont Mining's fallen from about $42 down to under 35. Straight move down. This is a gold miner. And the reason why I like this is, number one, it's coming into a lot of support down here around $34. But if we flip over to gold, and this again, I like to do this comparison, is yes, gold has come back, but gold's only down maybe 2 to 3%. Right, from its all-time highs or close to those highs. So what I do is I do this comparison. I say, okay, gold dropped 3%, let's say. Does it make sense that Newmont Mining has collapsed 20% or 25% off of these levels? And to me, that's where it starts to get interesting, where I start to see the technicals align with fundamentals. And that, again, to me is something interesting here. Again, not financial advice for everyone. I'm just speaking about what I'm looking at, what I'm potentially inching into.
Are you looking at parallels with these two? If they're in line? Okay.
Yeah, so the idea is if it can drop this much and then we get a breakout on gold, which I do expect, then this could easily go back up to here and maybe even have its own breakout. And what we could see here is there's this trend line here that goes all the way back here. So this is really the big level. But even just going back there would be a massive upside gain, about a 20% gain on the stock. So then you talk about a breakout. It's all contingent on can gold break out.
Following gold's lead.
Right.
Okay, some of the other big market movers, you mentioned Spirit Airlines, Instacart, Marathon Digital, and then Apple. I know those watch sales, I believe, are banned again. Is that having an impact on Apple today?
That a little bit. So Apple is down. Granted, the tech sector is down a little bit.
Yeah.
You basically saw Apple test yesterday's lows and it held. I still have this trend line here, though, that I still think it has to go down and touch. So if we just quickly look at this pivot low right here to this low, notice how close we are to that.
Yeah.
So I do think that at least we have to touch that, and then we'll have to reevaluate. But you're right. I mean, we're going from these exciting stocks like these AI stocks like NVIDIA, AMD, to a stock that's almost become like an old school stock. It reminds me of what IBM was now or has been. It's kind of like it's not the sexiest thing that it used to be versus NVIDIA's like, holy cow, that's the sexy thing, right?
But it's still going.
Exactly, exactly. So I think that for the most part, I expect downside to here at least, and then we have to see if it breaks that trend line. That's where it really becomes kind of this area starts to get very scary for investors if it breaks that area.
You mentioned on the game plan that the market is pricing in the first rate cut, maybe in May, which is different than what was originally predicted, which would be March. So do you believe that the market is moving toward what the Fed has projected? I
think so. I think it's very clear to me that at this point, the market probably overestimated how quickly the Fed will cut. We're still seeing there is some economic data that's really scary, but then the jobs data is still strong, and we saw the retail sales still strong. And Federal Reserve President Valliere yesterday basically came out and said, hey guys, if the economy stays strong, we may only cut once this year. And so the Fed is actively trying to tone down the expectations because the Fed doesn't want to shock the market. When you shock the market, that's when you get these crash scenarios or these flash crashes. So they're really marching out all these Fed presidents to say, hey guys, let's tone back our expectation. And they're overshooting to the low side. They're like 1 cut, the market's saying 6. Well, where are we going to end up? Probably at like 3, which is what the Fed originally said. And that's what they're trying to get market expectations to.
Okay, for our crypto investors, can we take a quick look at where Bitcoin is at and maybe even Ethereum as well?
Yeah. So Bitcoin continues to just hover on this level, a little bit of a down day today. But again, what we can clearly see here is this upsloping trend line kind of connecting over all of these levels. And we're just on top of that. Now, the two scenarios are this. One is we start to rally back up and we retest these highs, which would be very, very bullish. The other scenario could be that we continue to go sideways like this, which then creates a bear flag. And that would then lead to a potential for a breakdown to 38,000. So when you just see a few sideways candles, it's what I call an immature bear flag. Immature means that probabilities aren't really heavy one way or the other. It could go either way. If you get a bunch more sideways days, that becomes a mature bear flag, which then starts to take the probabilities in its favor significantly. And so really over the next couple days, that's what I'm watching for. We either need to get a move up soon in Bitcoin to retest, let's say, 45 or 46, or if we stay here, the probabilities of another dip are coming on stronger and stronger.
Okay, and then Ethereum is possibly the next in line for an ETF approval.
Yeah, that's an interesting one. And again, one of the cool things about Ethereum here is that you've had this long-term channel right here, right? So again, if I zoom out a little bit, and I know there's a lot of trend lines on here, but basically what we have is that you have 2 levels, right? So we have this lower level, which then connected through here. And in fact, I'm going to erase that one to keep it even simpler. And then again, I love keeping it as simple as possible for
Please.
everyone.
I'm still learning this.
So there we go. So basically what you have here is two parallel lines. Amazing how markets, like there's no one sitting there saying, hey, this has to be exactly parallel to this. It's just that's human psychology. It's a way that we subconsciously make order out of chaos.
Yeah.
And it's so cool. So we basically have these lows here, and then we take a perfectly parallel line and we get that high, and this was the exact high on Ethereum. Now, the bigger question again is, can we break through this 2730 level? If we do, we probably go over 3,000, but you always respect resistance until it's broken.
Okay.
So like so many of us that are bullish on Ethereum would be like, oh yeah, it can do it. I know it's going to do it.
Yeah.
But really, in reality, you have to respect it as a technician until it's broken. So as of now, respect this level, and it's where we've pulled back. We could head down here again. That is a possibility. But if we can break above this area, that's where you get that next leg up.
Follow the psychology. Boy, are we up and down.
Yep.
All right, Gareth, thank you so much. We appreciate it very much. I got to watch the chords here. We've got a few things going on. Don't forget, you can catch Gareth every morning before the opening bell on his show, The Game Plan, where he navigates the charts in real time. And the game plan starts at 9 a.m. right here on the Verified channel. I told you I have another guest. Let's bring him in. My other special guest today is Head of Research for CoinDesk Indices, Todd Groth. Todd, thank you so much for joining me on Trading the Close on this Wednesday. How are you, my friend, in sunny California?
Enjoying it. Little chilly here, hence the vest. But yeah, thanks for having me on.
Wait a minute. Tell us what chilly is, because we're in Florida, and I think it's chilly here. We're maybe in the 50s if we're lucky today.
We haven't broken resistance below 50, if that's an indication. So yeah, 50-ish. We get to wear a little, some sweaters, and it's nice. It's nice, almost fallish.
Your chance to break out that wear. I love it. All right, let's talk about CoinDesk. Explain what you all offer at CoinDesk for those who may not be familiar.
Sure. So CoinDesk, and I'm part of, I had a research of CoinDesk Indices. What our mission really is to be an index provider to the crypto ecosystem. And so by that, creating indices, benchmarks for the space and for this emerging asset class. The funny thing about crypto is there's a different price per exchange globally. And so there is, unlike, say, the US stock market, where there's always one price nationally across exchanges, there isn't that in crypto. So our first and our biggest product is an index on Bitcoin across multiple exchanges, so that you can point to one price and not have to look about all these different prices across different global exchanges. You can actually just look at one price, and that's our XBX index. But then further than that, we're going into we call multi-token indices or multi-asset indices. Those are sectors sort of similar to like the GICS sectors in equities, with you have your industrials, your financials, your consumer staples, etc. In crypto, we have the same thing. We call them currencies, smart contract platforms such as Ethereum, digitization, computing sector such as Chainlink, which is a price oracle from data sources to bring them on chain. We have a lot of different sectors, and applying those different that sector framework to the crypto space, we hope unlocks a lot more interest and acknowledgement that all these tokens have different use cases, and they're all part of the greater ecosystem of this emergent asset class.
I know, and there's more and more of them, it seems, every day. So you're bringing clarity to this space. Let's talk about the CoinDesk 20 that was recently introduced. I saw the press release today. So is this the Dow Jones of crypto? What is it exactly, and who can invest in it?
Yeah. So we're calling it either the Dow of digital assets or the triple Qs of crypto. So basically, it's a 20 index, 20 token index, where what we do is we start with a market cap weighted index, much like a lot of it is indexing the no decision is to do a market cap weighted index. We started with that, but that really weights the index towards Bitcoin and Ethereum, which are the two largest tokens by far in terms of market capitalization. So we cap those so that 30% the largest token, 20% the next largest, so that those two top tokens, i.e. Bitcoin and Ethereum, have 50% weight, and then you have diversified exposure across all these alternative coins, alt tokens, that have a lot more potential price appreciation as more people go further into the crypto ecosystem and understand the utility of these different protocols and projects in delivering a new decentralized financial future.
I know people can go to the website as well at CoinDesk and find out exactly what it includes and get more information there as well. So it's been a week since the ETF started trading. Do you think it was a successful launch for Bitcoin?
I think overall, yes. And I think it almost went unnoticed that it was 1 week into Bitcoin's 15-year birthday. So Bitcoin now
Yeah.
is a 15-year asset. And over 4.5 billion traded on that debut day. So I think overall that the launch day itself was a success. I think there was an expectation or an uncertainty about, is this a type of because it's such a communicated event, is this sort of a buy the rumor, sell the news type scenario? It was fairly communicated. I think it did as anticipated. We did trade lower a few days after the launch, but I think overall it's less about that individual day as a catalyst. It's more thinking the medium and longer term horizon of the fact that now we have an ETF vehicle that's very familiar with a much larger set of investors where they can get access in a regulated way to Bitcoin, and hopefully, fingers crossed, hopefully Ethereum spot ETF will be launched sometime maybe second quarter, third quarter of this year. By having those simple traditional market investment vehicles like an ETF that any of us can go to our broker and just click the buy order and have an allocation being issued by large asset managers such as BlackRock, such as Franklin Templeton, Global X, and Fidelity. That's a real game changer. I think that because a lot of people that are in crypto, they went through the tech of cold storage versus hot wallet, knowing their keys, your keys, your crypto. They went through all these technological hurdles just to invest in the asset class. And I think they underappreciate the hurdles that they went through, that any of our parents or our grandparents would have to go through in order to allocate to crypto, are not insurmountable from their perspective. So I think this does unlock a much larger investment cohort to the market. And this is on the back of Bitcoin and Ethereum outperforming equities in 2023. I think we have broader conversations about a 60-40 stock bond mix. What do we do in this scenario where we still have somewhat high inflation, have a very large government deficits? Where do bonds play a role? Where do stocks play a role at these valuation levels? So I think we're starting to see maybe it's probably a reconsidering of 60-40, and maybe it's a 60-40 plus Bitcoin now that we have a spot ETF, maybe plus a little bit of Ethereum, adding those assets in for potential growth expectations of the future, and also the fact that these are digitally scarce assets that do well when we go through periods of interest rate cuts. Now, if we do get a recession towards the end of this year, maybe the economy still has no landing, and maybe we have a soft or maybe a hard landing in 2025. When that does occur, and we do cut interest rates, and we do start the economic stimulus engine back up, these assets they have quite a bit of exposure to global liquidity and do quite well in those environments. So I think this is definitely a part in a broader portfolio.
So if we were to enter a recession, that could be a good thing for cryptocurrencies. Explain why.
Yes, it could be once we cut interest rates. Going into a recession, it's all about a matter of what's the piggy bank that gets smashed if someone needs liquidity. Is it stocks? Is it bonds? It could be crypto. It could be any asset for that matter. Generally, investors like to liquidate more liquid investments before they consider the illiquid investments due to what we call an illiquidity premium. You can sell your house tomorrow if the price is right. If you want a good price for your house, it might take a few months, even a year, to find the appropriate buyer. So generally in a portfolio, the more liquid are the ones that get sold first. But once we get through to interest rate cuts, through to monetary and fiscal stimulus packages, we would expect that crypto, Bitcoin, which is limited to 21 million tokens, and Ethereum, which now has a monetary policy framework that is dependent on activity on the network. At times that is actually deflationary. So there's less Ether tokens on the Ethereum network per transaction. Those two digitally scarce assets, we think, are ripe for significant price appreciation in that economic stimulus scenario.
We hear a lot about Bitcoin, we hear a lot about Ethereum, but of course there are many other cryptocurrencies. Are there some that you feel don't receive the attention they deserve?
I do think that so Ethereum is in an awkward spot right now where it's a few of the other smart contract platforms such as Solana gained a lot back in market share in 2023. And so while Ethereum is the biggest, it actually could be losing the race over the long term to its other competitors. So to that end, I think that it's really kind of a wait and see. Ethereum does have a lot more users still than other tokens, and there's a lot more tokens built on top of Ethereum. But I do think if we think about both price oracles, which is basically sending data onto blockchain, so smart contracts can execute conditional on that data set. I think that that's an area that is underappreciated. But I think that it's really a matter of users to then go into first they look into Bitcoin, they understand Bitcoin, they get into Ethereum, they all of a sudden get aware of a much broader and richer ecosystem, and then can start to place bets within it. I think crypto also is there's a very nice interplay with AI in the sense that AI models can actually be paid for through tokens, much like crypto tokens on a blockchain to pay for data queries of much larger data sets and pay for output from next generation ChatGPT type models. That could all be through a tokenized blockchain network which utilizes data sets that are available on chain. So to that end, I think we have a computing sector here at CoinDesk Indices. I think a lot of those tokens they actually correlate quite well when there are AI thematic runs in the stock market from the likes of NVIDIA, AMD, et cetera. We do see some of those investor behaviors also going into our computing sector token basket. So be sure to check that out. It's available on our website at coindeskmarkets.com for the whole list of tokens. But there's definitely a lot of different themes, even in crypto, that we think are underrepresented relative to or overshadowed rather, relative to Bitcoin and Ethereum.
Yeah, and that could be changing. Todd, thank you so much for your time. Such great insight. Please let everyone know where they can find you and follow you.
Sure. So I'm on Twitter, formerly or X, formerly known as Twitter, tgroth8. There's the handle right there. And look forward to thanks again for the time and looking forward to continuing the conversation. Thanks, Toni.
I would love that. We'd love to have you back on Trading the Close. Thank you so much. You stay warm, mister, in that sunny California weather there. Take care, Todd. And that does it for Trading the Close on this Wednesday. Thank you so much for watching. Make sure you stay tuned for Financially Fit with Benjamin Poole. He will teach you how to master the basics of trade setups and what patterns to look for. That is next at 5. And I will see you tomorrow on Trading the Close.